I'm repeating myself, it's because I'm repeating myself. Alright, welcome back to Lunch at the Markets on our Christmas Eve edition. So far, so good on the markets. We had a great piece that basically said we'd see nothing happen until earnings season. I know the markets have melted up, but really the Dow is just back to where it was before at 10,500, so the story is in place. The question is whether or not we see another dip back down, which has been the pattern now for about a month, or whether we break for another leg higher. Most of the targets out there for the S&P to get up to 1163 to 1200 by the end of 2010. Earnings season may be a sell. Earnings season may sell the news event, but for the banks, the yield curve is pretty steep, so that eventually means massive profits and earnings for the banks. We start to see that, and I tend to think we have another leg up. We bought lots of JP Morgan Chase preferred today, offered with a 7.2% yield for $25.60. No matter what, we think this market is now a stock picker's market. Harder to play the broader market, and you'll have to be more tactical. That being said, let's take a look at the stocks we've been asked about today. Tianyan Pharmaceutical Company, symbol TPI, comes from Archie Stocks out of China. Is a pharmaceutical company, and it's working on modernizing traditional Chinese medicines. They have 39 drugs and 17 more in the pipeline awaiting approval from the China State FDA. The PE is fair, trades at a 13 basically, and the forward PE is only 9. Not bad at all. The margins are nearly 20%, and they actually pay a 10-cent dividend. That's 2.4%. They have $14 million in cash and only $1.4 million in debt. There's good operating cash flow, but the levered-free cash flow is negative, so it looks like there's a burn rate as they bring these new drugs to market. Revenue growth, though, is up 40% year over year, and earnings are up 20% year over year. Those are not small numbers. You can easily pick up a couple hundred shares of this stock without blowing yourself up as long as your portfolio is big enough. For a more tempered trade, look at Guild. This stock, we think, is forming a base right here at $43, down $10 from its 52-week high. We continue to think that the stock is attractive. The big dividend players like Bristol Myers, BMY, and Johnson & Johnson, J&J, we also like in the space. If CSKI ever pulls back, no guarantee there, then grab that sucker. Take a look at CMED, China Medical Technologies. It's got a 3.8% dividend, and it's not run up too much this year. That's probably your small cap China play, CMED. Finally, Shukra asked for ACHN, another small cap pharma stock. This one has no earnings, and it's burning millions a year trying to develop hepatitis C and HIV treatments and other antibacterials. Honestly, this is way too speculative in the HIV franchise. We've already given you Gilead, G-I-L-D, and they're a dominant player in the space already, and ACHN is still in the phase 2 of their treatment, not really our cup of tea. All the same commentary applies to this name as well. Commodities have been really ripping this week. We'll see if that continues. Don't forget, 3 great bowl games are on January 1st, so check that out. I'm sure someone around here will be watching that, and we'll give them the Twitter so they can rejoice or cry over the games. Everyone, have a Merry Christmas. Hope your families are happy and healthy, and we'll see you next week.